I've been including FDVV in a lot of my videos recently, and for good reason. This Fidelity Dividend ETF has a very solid track record throughout its 8-year history. In this video, we'll take a deep and nerdy dive into all the juicy details. We'll cover its methodology for its stock selection, and we'll also see how it stacks up to the fierce competition. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please light up that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. This will be my last Seeking Alpha shoutout before my old link expires. The new price of Seeking Alpha is $300 per year. But if you're interested in Seeking Alpha Premium, of course that's the first step, and you want to get a discount on it, use my link in the description below to get your first full year at $214 and the full second year at $239. That's right, you're saving $145 across 2 years. You know what time it is. Let's grow. FDVV Basics. FDVV is the Fidelity High Dividend ETF, and it has a straightforward stock selection process. The methodology for FDVV is that it selects from a universe of 1,000 of the largest US companies. This is the Russell 1000 index. 70% of the weighted score is on the trailing 12-month dividend yield, so it puts a high emphasis on that yield. The next 15% of the weighted score is on the payout ratio to get some dividend safety in there. And then the remaining 15% of the scoring is on the trailing 12-month dividend growth rate. I prefer a 3 or 5 year dividend growth CAGR personally for screeners, but it just likes to look at the last year for each company. It can have up to 10% of its holdings in international stocks, and it uses the same process, but it selects from the 1,000 largest international stocks. It usually holds 5 to 10% of international stocks at any one time. FDVV pays mostly qualified dividends, the good kind of dividends as far as taxes are concerned. In 2022, 92.3% of the dividends were qualified, with the other around 8% being ordinary income. I think the increase in real estate holdings will have the qualified dividends down a touch in 2023 and 2024, maybe to about 90%, but I couldn't find any exact figures online for this. I gotta say, during my research, I was a little surprised that the yield is so low when it puts 70% of its weighting into this category. SCHD has, in my opinion, a better screening process, and it only puts 25% of its weighted scoring system into the yield. But it does sort out lower yielding stocks before the scoring process, so there's that too. I think FVDD focuses too much on dividend stats, which isn't a historical winner in factor investing. Don't get me wrong, I love my dividends, but some of the dividend stats with this one left something to be desired. Let's dive deeper into some of that stuff. FDVV Key Metrics. The dividend metrics look underwhelming in some categories, but yet blew me away in others. My big 3 metrics for dividend ETFs, as I mention quite often on this channel, are the dividend yield, get that cash flow in now, that's important of course, gotta cover those bills. The dividend growth rate, that cash flow needs to outpace inflation moving forward. And of course the total return to make sure we're not falling into a yield trap. Let's dive into the mixed results of FDVV. We've pulled up FDVV out here in Seeking Alpha, and from this very first summary tab, the first thing I like to do is check out the expense ratio. And you can see the expense ratio is 15 basis points right here, and that's not too bad. It's a little higher than my other favorites like DGRO, SCHD, VYM, and Friends, but 15 basis points isn't gonna break the bank. You keep most of the money in your pocket. And the assets under management are a bit low at 3.55 billion compared to the other popular ETFs. On the holdings breakdown here, we can see that it's fairly high in technology at 25%. And then it comes in with about 16% of industrials, 12% of consumer defensive, 11% on utilities, about 10% in energy, and then almost 10% in real estate as well. And those are the non-qualified dividends from it. The top 10 holdings are pretty much all household names. We all know Nvidia, Microsoft, Apple, Procter & Gamble, Philip Morris, Broadcom, one of my holdings, ExxonMobil, and these next two are a little less familiar, at least to me, NextEra Energy and Targa Resources, and then you have Pepsi. And one thing I really do like about this fund is that it only has about 30% in its top 10 holdings, and that's much less than something like SCHD. So it has a pretty good balance between the 109 total holdings. Now we're out to my favorite tab, the dividends tab, and this is what I was alluding to when I talked about those mixed results. You can see that the trailing 12-month dividend yield is a pretty solid 2.84, puts it somewhere between DGRO and SCHD. But the trailing 12-month dividend growth rate is -1%. The 3-year dividend growth rate is nearly 12%, and the 5-year is under 3%. It does have 3 consecutive years of dividend growth and a total of 7 years of paying dividends, and that's since inception. You might be thinking, these feel a little all over the map, and you're thinking correctly. Here's where these dividend stats can get a little random and a little less flattering. So I never count the first year, inception here in 2016. In 2017, it paid $1.04 per share. And then 2018, it jumped up to $1.11, not too bad. And then $1.28, looking pretty steady in 2019. But then in 2020, it's back down from 128 to 103. That's not good. And then it's back up to 109 in 21. And it wasn't until 2022 where it matched its performance from 3 years before at $1.28. But then we took a massive jump in 2023, which explains why some of the CAGRs look good and some look bad, depending on how far back you're looking. But as an investor, I like consistent growth. So this leaves a lot to be desired in the consistency aspect, and that makes sense because it doesn't scrutinize balance sheets at all, and it puts a big emphasis on yield. And we won't spend too much time out here on the charting tab. It is my second favorite tab behind the dividend tab. However, we are going to do a specific portfolio visualizer test here in a minute, but I just want to quickly jump through its performance history to give you an idea of how it has done versus its peers. So what I did here was I pulled up FDVV, and then I put in descending order of yield, SCHD, VYM, DGRO, and the market, VU, to see how it does against the S&P 500. I always like to add that one in there, even though it's not a dividend ETF, of course. And just for your reference, FDVV has a nearly identical dividend yield to VYM. So SCHD is significantly higher, and then DGRO is 2.19 right now, and then the market's usually like 1.3. So VYM is right there at 2.8 something. And we are looking at total return. Dividends are included. Let's start here on year to date. FDVV has given us a juicy 20% return, which is higher than all the competition, including the market, which is at 19%. That is very impressive. Over the last year, FDVV is 28%, and it's more or less tied with the market at 28. DGRO is at 23%, VYM at 21.5%, and SCHD, ouch, 18.6. Now, if we zoom it out 3 years, FDVV is crushing the market. What the heck? So apparently I'm wrong. It's the best ever. Video over. The market at 35% to FDVV's 46.3%. And then SCHD coming way up the caboose at 25.3. And then VYM actually ahead of DGRO. Quite interesting. But FDVV by far and away the best. Zoom it out 5 years. Okay, the market's finally ahead. Goodness, I thought this thing was like a cheat code here. The market's at 103%, whereas FDVV is easily second place at 95.5%. HD passes its peers now at 81% versus 77 and 66.6, creepy, of VYM. And for the last one here, I did a custom date range, and it starts here at 9/15/2016. It's 2,923 days worth. So I just did when FDVV, the newest of all these, started getting data. So you can see basically since inception, it's up 165% to the market's 200. And of course, we're not here to outperform the market, generally speaking, with dividend ETFs. They're more for a stable floor and consistency with cash flow and things like that. But you can see that DGRO has slightly outperformed it at 170%, so it's about 5% ahead. SCHD's coming just behind FDVV at 158.6, and VYM, and this is pretty typical of this one frankly, is lagging quite severely at 125% total return. Now I will say, in my defensive tone, SCHD actually outperformed VU in total return in its first 11 years by a decent margin, but the last couple years have hurt it, and since this is only 7 years, it's falling short. But if you extrapolate these back, SCHD would be a pretty clear winner, but you can't do that because FDVV didn't exist. Cool stats, bro. But how does this ETF stack up against the competition? FDVV Backtest versus the top dividend ETFs. FDVV does have fantastic total return stats since inception. Let me show you this. Okay, we're out on Portfolio Visualizer here, and I'm going to show you the setup we're using. We're going to put FDVV through the ringer against some stiff competition. We have Portfolio 1 is FDVV, Portfolio 2 is 100% SCHD, and Portfolio 3 is DGRO. And I wanted to put FDVV up against a higher yielding grower and a lower yielding grower. So the yield of FDVV is right in between these two. So I think this is a pretty good spectrum of competition. And we also have, we're gonna use SPY this time instead of VU to mix it up to see how the market did as well. Okay, and then out here in the settings, we're going to pull as much data as possible. So the start and end year is, it says 1985. I think it's going to be 2017 if I'm not mistaken, the first full year of FDVV. Through 2024 year to date, yes. We're going to start with $10,000 and contribute $1,000 per month throughout this scenario. Rebalance doesn't matter, it's only one holding per. Reinvest dividends, of course, and display income, yes. So let's see what we get. Okay, and we were correct in our assumption. We're looking from January 2017 through August 2024, and that's as much as we could view here. Going down to the performance summary, you can see here we start with that $10,000, we put in the $1,000 a month. So we have FDVV with an ending balance of $187,882, which outperformed both SCHD and DGRO at 174.3 and 176.3 respectively. And the market, SPY, did slightly outperform FDVV, but again, that's pretty typical for the markets to outperform dividend ETFs, bonds, and safer assets in general. These are also floor protectors by comparison, and I can show you an example of that. Look at the worst year. FDVV's worst year was -4%. That's actually really impressive. SCHD's was -5.5%. DGRO was down nearly 8%, but the market was down 18% on its worst year. So that's sort of the whole point. These aren't necessarily for total returns. They're for good, stable, and still steady total returns. Looking at the portfolio growth, you can see that FDVV did have a little fall here. At one point, it was coming in last place by a decent amount, but then it came steamrolling back with the tech run, so that'll help something that has a lot of technology in it. And for the annual return chart, we have in blue is FDVV, HD is green, DGRO is gray, and SPY is teal. So in the first year, you can see FDVV had a very tame year, and that's why it fell behind early compared to the competition. But then in the next year, it was the best by a decent margin. And that was SCHD's worst year right there, as you can see. Coming into the following year, everything was up, but it caught a little less of the market upswing. And then it really struggled in 2020. Yikes. That's actually a pretty significant underperformance. I'm just looking at this stuff for the first time too. Interesting. Everything bounced back in 2021, pretty much a tie for the most part here. And you can see the market really struggled in 22, and these dividend ETFs all did a lot better, particularly FDVV and SCHD. I'm very impressed with the downside protection of FDVV as we look at these year by year returns. And then in 2023, you can see that's where SCHD started losing. As I mentioned earlier, SCHD actually outperformed SPY in its first 11 years, but then in 2023, it really gave it all up and then some to take the overall L over its 12-year history. This year so far, SCHD hasn't quite recovered. FDVV is just rolling, outperforming everything, including the market. Very impressive stuff. And we'll quickly cover the total annualized returns here. With FDVV over the last 1 year, you're up 27%, wow, to 17.8 of SCHD and 22.6 of DGRO, and the market nearly 27 as well. It's just been a crazy good year. Over the last 3 years, things have been a little more beat up, but you can see FDVV has an impressive 12.86% return. Over the last 5 years, everything's been extremely solid, particularly the market and FDVV. And over the full nearly 8 years, FDVV is up nearly 13%, but the market is up 14.7, so that's a decent outperformance. But you can see FDVV is ahead of SCHD, but behind DGRO on the annualized returns. And I think this chart's pretty telling. You can see that FDVV had the yield advantage over SCHD and DGRO early on, and it grew pretty well, as we saw, but it had some ups and downs, whereas SCHD is just growing solid, which is the green bar here. But you know, FDVV had that big year we talked about in 2023, it bounced back, and then so far in 2024, it's fallen short of SCHD. So the overall growth has been solid. It's just been a little more sporadic than DGRO and SCHD. You can see they just bounce up year by year. Of course, DGRO needs more time to compound as it's a lower starting yield. And to quickly cover the high-level stats on FDVV here, this is a cool little key metrics chart. You see that yield just over 2.8%. There's that expense ratio at 15 basis points. But what I like to look at here is the PE ratio, 19.58, not a bad value proposition. And again, it's pretty heavy in tech at 25% even. SCHD has a higher yield of 3.35, and that's actually going up quickly with its reconstitution and each quarterly dividend lately. A lower 6 basis points of an expense ratio, and a slightly lower 17.53% PE on the value proposition. You can see it mixes in quite a bit of mid-cap as well. And its highest sector is actually financials at 18. Its tech is very low at 10.4. And that, again, that's what I love about it, mixing it with VGT, QQQM, and VU within my portfolio. And DGRO, it does have more growers, so it makes sense that its PE is a little higher at 21.7, lower starting yield at 2.2%, and the second best in the group expense ratio at 8 basis points. And it has some pretty good sector balance, with its highest being financials as well at 18, and its tech is only a tame 17%. Only a fool would argue against an ETF with that performance, right? Final thoughts. I do my best to put my real feelings into these conclusions without sugarcoating too much. I really do think FDVV is a solid dividend ETF, but I'm not interested in buying it. It has a lot of tech exposure, which causes too much overlap for my comfort with my other core holdings of VU, VGT, and QQQM. The outperformance versus its dividend peers is primarily due to the massive tech bull run rather than a superior selection process. VGT, a technology-only ETF, is up a massive 530.7% over the last 10 years as I record this video. That sector accounts for about a quarter of FDVV's amazing performance. Now, I'm a massive tech bull, and VGT has been my favorite ETF, as many of you know, for many years now. But with dividend ETFs, I value consistent dividend growth and low weighted overlap with my other core holdings. It's kind of the same logic of people that hold bonds. They don't buy bonds for the total returns. Like, that's not the objective with bonds. It's more to balance out a portfolio in shaky markets, like when tech crashes. And I view dividend ETFs, hence why I like SCHD, with that low PE ratio, low tech exposure, and very low correlation and weighted overlap with my other holdings. So for me, this category of investment isn't strictly about those total returns. I would rather split my dollars between SCHD and VGT to capture the best of both worlds over time, and with the ultimate goal of outperforming the market, but not without the downside protection. Share your thoughts about FDVV in the comments below. And now let me share something with you. We had 5 new channel members over the past couple weeks. A huge shout out to the 5 of you on the screen now and all of you that have been here all along. I hope you enjoy the perks that come with the membership, and I really appreciate your support of the channel. It means a lot, and it really does make this possible. Check out one of these 2 videos if you want to continue down that path towards your version of financial freedom. I always link my most recent video and the one that the robots think that you'll like the best. Thanks for watching, and I will see you here next Sunday. Peace.